right, joining us right now for more on the markets is Jeff Saut. He's the chief investment strategist at Capital Wealth Planning. And Jeff, are you still feeling like the lows have been placed in this and that it's going to be stronger markets from here?
I think the lows are in, Becky. I don't think they'll get retested. But 2 weeks ago, I said the market's in for a rough spot here for a while. You know that the economic numbers and like the retail sales are going to be ugly. I think the market's going to look by that because as things reopen, I think I don't know how it is in New York, but everywhere else I talk to in the country, there's huge pent-up demand from people like Cheryl and I that want to go out to restaurants again. So I think the markets will look by this upcoming soft spot in the economic reports and the softer earnings that are going to be reported, and we're going to look for a pretty strong pickup in the back half of this year.
You know, the knock-on effects, though, from something like retail, where you hear from all these retailers filing for bankruptcy and others that are closing lots and lots of stores, that feels like it's not going to be as simple as just reopening things, right?
Yeah, that's fair. That's a fair point. And one of your earlier guests talked about that might have a knock-on effect with some of the banks, which is probably true. But again, I don't think it's going to be that big a deal, and I do think there's huge pent-up demand out there. I mean, we haven't been able to go out to restaurants for 5 or 6 weeks.
Right. What do you do in terms of the market, though, Jeff, if you think the market's going to look past some of these bad numbers? What are fair valuation for just any of the sort of stocks that you're looking at right now?
Well, I said on CNBC, and I've written in my letter the past 2 weeks, that the market's in for a rough spot right here. My models don't tell me how low it's going to go, but again, I don't think the lows that we made a couple months ago are going to be retested, because I think you're going to get a pretty strong pickup in earnings in the back half of this year, and I think you're going to get a pretty strong pickup in economic activity in the back half of this year. And there's a ton of cash on the sidelines, and if you talk to the retail investors, they're still scared to death. And that's not the way market blow off highs are made. So I think we're still in a secular bull market. Secular bull markets last 15 to 20 years. I think we got 5 to 10 years left in this one, and very few people believe that.
Right. Hey, Jeff, we've got about 40 seconds left. What do you think it would take to convince retail investors who have been on the sidelines to go ahead and put some of the cash to work?
I think it'll take a rise in the equity markets to new all-time highs, which I think is going to happen probably in the first quarter of next year.